there's been an awful lot of noise in the industry at the moment, particularly around the Royal Commission, the Haynes report and the recommendations that he's put out to the broking industry. And today we welcome Jeremy Whelan, State Manager from AFG, to provide some insights around where he sees the industry is heading and what the impact of these recommendations will be, should they all be implemented by the state government. So Jeremy, how do you see these things impacting on the consumer and also the broker market moving forward?
Yeah, look, it's certainly been a very hectic time. I think what I will do first is I'll give you a little bit of background, some facts on the industry so the audience understand where we're all coming from. Firstly, the broker market share that we're seeing out there today is continuing to grow. In fact, recently it's just peaked at 59% of all mortgages written in Australia are by mortgage brokers. That clearly states that customers trust their broker. Now, a second thing to consider also is the fact that industry survey results show that 96% of brokers' customers are either satisfied or highly satisfied with the service they receive from their brokers. Now, on the flip side to that, I think it's important to note that across the financial services sector, broker complaint rates are less than 1%. And if you look at the banks, their complaint rates are running at above 70%. So what that tells us is that the industry that we work in is a very highly customer-centric industry, and that we are producing great customer outcomes. If all the recommendations that have been recommended are implemented, it will have significant impact, or material impact on our industry and the ability for consumers to access lender products and services, so competition will be eroded. The competition by our sector has over time contributed to lowering borrowing costs for all homeowners and home borrowers out there today. So brokers don't simply go out there and provide product and service, they are delivering solutions for customers. And so what they are providing in the marketplace is intelligence, they are providing education on all aspects of finance.
So Jeremy, why would the competition be eroded as a result of these recommendations?
Well, firstly, brokers themselves, if you look at it across the industry, are supporting major banks and non-major banks. So they're providing choice to consumers and they get access to the different product ranges that are out there. Brokers working in the market obviously provide support across the non-major banks and major banks. So they provide lender choice. And so they give customers access to other options in the marketplace. Now, non-major banks currently are sitting at just over 40% market share, just about an all-time high. The big four banks are running around about 59.8% market share. If we go back and look at 2013, the big bank market share was just about 70%. So we've definitely made some inroads there. So what that's telling us is that the market today is providing a really good playing field for consumers to get access to very good mortgage options out there. Brokers are really the boots on the ground. They are the sales team for the smaller lenders and the specialist lenders, including your building societies, mutuals and so forth. These organisations can't afford to be employing sales teams, and so hence why they outsource that as a variable cost to brokers. The profile of these lenders, these smaller lenders that rely on the broker market, if they were to go and leave the marketplace, then the impact would be their market share would diminish. That would then mean that it would limit access to product solutions for customers. And then of course, that will then change the dominance of the big banks. In fact, the product commissioner examined this issue and the non-major banks stated they would have to, on average, open 118 branches each to continue to maintain their market share that they currently receive from brokers today. So without brokers, the big banks' dominance will continue to reign.
So what does this mean for the real estate market in the event that brokers have limited choice of lenders, product, credit, and what does that do to the consumer at the same time?
Brokers drive competition and they offer the shop front for the smaller lenders that don't have branch networks. So they moderate the dominance of the big banks. Reducing competition and access to the smaller lenders is going to remove choice and it's going to remove access to credit options. When you look at things like lower income households, You've got things like variable incomes, you've got complex credit circumstances out there, and the other thing also to consider is also the regional and rural areas. This will reduce the options of people wanting to buy homes and of course reduce the sales activity for the real estate industry.
So Jeremy, how do you think that the real estate sector would benefit from working closely with mortgage brokers to ensure that their clients are receiving the correct finance and enabling them to purchase homes?
Brokers I see as a critical member of the team to help Australian consumers with their property goals. Without realising it, finance is a key part of the buying cycle. So when you look at finance, it's all about choice, it's about access to credit, or favourable credit conditions, and finance. Without those things, then there is no home ownership. This impacts the real estate sector and the home buyers. And I think a point to also share with you that's really quite critical is that brokers work for the client first and they're agents of the lender second. It's a really key differential that really sets us apart, and it's a key reason why we're very successful as an industry. Like real estate agents, brokers' businesses are built on relationships. Without good customer outcomes, then there is no sustainable businesses for brokers. The other thing I think is important to understand that banks work bank hours and brokers don't work the bank hours. So they work at all sorts of hours. And I think you need to consider what it would be like to contact a bank at 5 p.m. on a Friday afternoon to find out the urgent answer on an application. Or again, to speak to a credit officer after 2 p.m. on a Friday, Western Standard Time. The other thing is also, what about ringing a bank on a weekend to find out if this client can afford to get finance and you're really urgently looking for an answer? No, that's the sort of service that brokers bring to the table. So who are you going to speak to if the mortgage broking industry is no longer viable? Currently it employs over 27,000 people. So the question's got to be asked, how are banks going to replicate the workforce to cover the cost of maintaining that sort of market share? And also, surely those costs have got to go up, and then also they'll pass those costs on in terms of interest rates to the end consumer. So really, brokers add significant value to the finance industry and the real estate industry. So we really urge you to keep that competition alive.